Americans are spending more money on cars than ever before.
And many people don't realize they've entered a financial trap.
It starts with one simple sentence.
Don't worry about the total price. Focus on the monthly payment.
And that mindset quietly locks people into years of debt. Car loans used to last 3 or 4 years. Now 6, 7, and even 8-year loans are becoming normal. The monthly payment looks smaller. But the total cost of the vehicle becomes enormous. And here's where things get dangerous.
Many owners owe more money than the car is actually worth. That's called negative equity. So what happens next? People roll the leftover debt into another car loan. The debt grows larger every single time. It becomes a financial hamster wheel. Years pass, but the payments never seem to end.
And the car industry knows exactly how to keep this cycle alive. They don't just sell transportation.
They sell identity, success, and social status.
People start comparing themselves through the vehicles they drive.
And emotional decisions replace financial logic.
But the payment itself is only the beginning.
Insurance costs on modern vehicles can be brutally expensive.
Fuel expenses quietly drain thousands more every year.
And repairs on complex vehicles can become financial nightmares. That $800 payment can become over $130,000 in total transportation costs.
Many people restructure their entire lives just to afford the car. Some even use credit cards to keep the vehicle running.
Others dip into retirement savings to survive the payments.
This isn't wealth building, it's wealth destruction. Cars lose value fast, yet buyers keep paying massive amounts for them.
A reliable, lower-cost vehicle can completely change your financial future.
Lower payments mean more money for investing, saving, and freedom. The smartest financial move is often the less flashy one.